Hi, everyone. Thank you so much for coming to our panel discussion today. I really want to thank you, all the panelists, for taking the time today to join us and to talk about the adoption of blockchain and the cryptocurrency and how these have changed all the FinTech era and all is going to be around FinTech. Now, I would like to start with Maria. Maria, if you are online, if you can do it now, please introduce yourself.
Yes, hello, this is Maria Granovska. I have been for, let's say, like a dinosaur, though I don't look like one. I have been for ages already in blockchain space. My first clients were the initiators of Binance. Oh, sorry, of Bitfury. Binance was my client as well. It was in April 2010. I still keep this email. That was the first question. What is the legal background of crypto trade? We're still dealing about it. You know, it's still a very, very interesting point of discussion. And we will probably come back to this. How does the regulation look like?
Absolutely.
Altogether now, I've been working for 26 years now in law, in international law, and of course in fintech and let's say investments. And we have done a lot of work for the new and for the old companies, for the classic financial sector in blockchain, what they can do, how they can liaise it with classic regulation of, let's say, big industry players. And also with the startups, international startups, we're dealing now with several very, very interesting projects on DAO funds, on development of metaverse, let's say a digital universe with music. And it's a very, very interesting project also. So lots and lots are going on. And I've done something also in, let's say, legislation and initiative drafting laws, even for Kyrgyzia, which was a fun thing to do. So I'm happy to meet everybody and happy to be here. Thank you very much, Max, for inviting me.
Thank you, Maria. Thank you so much for coming. Let me move to the second one. Arthur, please, if you want to introduce yourself.
First of all, thank you for having me here. For the past 10 years, I've been in finance. I've been always within the startup sector, let's put it this way. Currently, I'm leading the investment wing of venture studio focusing on AI, ML, fintech, all around there. We both onboard projects and we invest as a VC and we build our own products within the sector. Also, I'm one of the advisors of TruePNL, which is a launchpad. We do IDOs there. We onboard interesting projects. We incubate them basically, and we grow them. We raise funding for them, and whatsoever. I'm not as bright and speaker as Maria is, but I think I've covered it all.
Thank you so much. Let me move to Aaron. Aaron, please.
Hello, I'm Aaron Tsai, founder of Moss Capital, MossFi Public Blockchain, and HashBrown an open cross-chain DeFi platform designed for everyone to use. I'm a Chinese-American investment banker. Before SPAC became mainstream, I formed 101 public shell companies in the 1990s and is known as King of Shells on Wall Street. I formed Moss Capital in 1995, and Moss Capital team provided US IPO and SPAC listing service. In December 2021, we launched HashBrown Swap for public beta. Okay, that's the brief description about me. I spearheaded the public shell industry long before SPAC became mainstream, and today I'm fully committed to the future development of DeFi. Thank you.
Thank you so much, Aaron. Let me move to Ali. Ali, please.
Hello, everyone. My name is Ali Fadvi. I represent Reflex Capital today. which is a micro tech VC fund based in India. We look at technology very closely. It acts as a key horizontal, and then by verticals, we are agnostic. And therefore, we can look at a range of sectors from fintech to edutech to consumer tech and so on. Within technology, we like some of these new age concepts like AI, ML, blockchain, augmented reality, virtual reality, um, cryptos, and so on. And that's something which I've been tracking closely as far as the India ecosystem is concerned. And during this conversation, over the next 1 hour or so, I will be sharing my perspectives on what the India landscape is looking like as far as fintech and blockchain is concerned. And also, I'm quite excited to be part of this panel to have so many, distinguished speakers and domain experts, and hopefully it'll be a good learning for me. As far as the fund goes, we've invested in about 25 odd startups, which are mainly India centric. And in terms of capital deployed, we have about $12 million with both. Thank you.
Thank you so much. And we go to Andy. Andy, please, if you want to introduce yourself.
Hi, my name is Andy Weinstein. My company is Butler Distribution Group. What we do is apply, let's say, Web3 concepts to legacy businesses. I got into blockchain and distributed ledgers back in the day when I was trying to solve distributed labor problems of how do you build a company that can scale kind of infinitely. And that's where I started to do research into DAOs and cows and all that. I've been in the space basically relatively new, and in 2017 is when I kind of learned about everything. And since then, I've been very active in the IOTA community. I'm part of IOTA DAO Pioneers. I'm a mentor at Plug and Play Tech Center in Silicon Valley. I really love the blockchain space, and I think that it's going to be very transformative going forward. I think there's a lot. We're still really early. And it's really exciting to see kind of early development and all of these changes that kind of happen within a bear and bull market. Right now, you're kind of shaking out a lot of the fake projects, and it's going to be good in the long run. So I'm kind of really excited. Thank you. Short-term pessimist, long-term optimist.
Thank you so much, Andy. So let's start move to the topic so we can start talking. The first one, and I want to share. So the first one is, let's say, more generic. How has fintech changed with the adoption of blockchain and crypto? Who wants to take the first? Andy.
Basically, how has fintech driven adoption of blockchain and technologies? I think is very simple. People go where there is money. Fintech is money, right? There is a way that you can exchange capital without having to pay a middle person, as well as kind of have a certain, let's say, mathematical clarity to what you're playing with. So I think that fintech has really kind of eliminated a lot of the human elements and the human trust elements that we have. But at the same time, it's transparent-ish just because of the fact that not everybody understands the mathematical languages behind each type of fintech product. But I think fundamentally, it's really about how do we put more dollars into this ecosystem, and fintech is that input valve.
Arthur, what do you think about it?
I completely agree. I would even add to that while reading this question, like how fintech changed the adoption of blockchain crypto, I don't know why, but the answer of DeFi comes up. So basically, blockchain has made the DeFi rise. I would put it this way, because that's the whole idea behind blockchain decentralization. And if you put decentralization together with fintech, becomes DeFi. So basically, yeah, I think that's how DeFi rised. Sad news with Luna lately, but I mean, overall, I believe the market is growing. I've been seeing loads of interesting projects within the sphere of DeFi lately, loads of lending protocols. I think I fully agree with Andy number one, as I'm Andy number two. I fully agree with Andy number one. Feel free to have the number one symbol. I strongly, how to say, agree with the fact that where money goes, everything is going there. So people are very excited about it. If you see the mid-age group of crypto enthusiasts, so basically they are interested, they want to go for the X's, they see those lending protocols, and I think the whole sphere is going there. And I actually, long term, I do believe that's here to stay.
Adam, what do you think?
The adoption of blockchain and crypto, which is known as decentralized finance or DeFi, is transforming global finance. DeFi provides equal and easy access to people in underdeveloped nations as well as developed nations, provided they have mobile phone and internet access. Even a child with sufficient internet proficiency can participate in global finance or sell a magic sword in the metaverse. An unbanked person living in Amazon forest or the Himalaya mountain can receive salary, create NFT artworks, or invest in a security token version of REITs in Taipei. The DeFi is rapidly evolving in forming a more secure and efficient financial service ecosystem to mirror and I believe eventually replace the old. The new DeFi system already has a tremendous impact on the outdated centralized financial system or CeFi. So the DeFi war is already on in dominating the new financial world. Using artificial intelligence or AI and blockchain technologies, DeFi players have an edge by commoditizing financial services with higher efficiency, hence lower cost. Okay, back to you, Max.
Thank you so much, Adam. Ellie.
Yeah, Max, I'm going to give you a bit of India perspective as well, just so that I can give you a lay of the land here and where we are in terms of our evolution. So at one end, while crypto is being evangelized as a possible investment avenue, where a few startups have raised money for crypto exchanges and so on, blockchain on the other end as a tech offering is witnessing very good traction with enterprises and startups, especially on the use case and the numerous advantages which it brings to the table. And some of it was already highlighted by the speakers before. So to that extent, there are startups which use blockchain, crypto as a base tech, and I see that across sectors, not just limited to fintech, but even media, entertainment, and so on, where the asset layer is both fungible and non-fungible tokens, and the NFTs make it exciting because it also opens up the whole digital asset play. Now, in terms of advantages, blockchain brings to the table, which is high speed, high security. There's a complete trail. There are no middlemen, and so on. And that's what some of the other speakers highlighted as well, in terms of the democratization of the whole process, where the underbanked are able to come in and take advantage of the ecosystem, and that works to everybody's advantage. Now, in India, in terms of evangelization, there are a few key stakeholders who are playing a role here. There are tech firms, there are consulting firms, and then there are startups who are contributing majorly to blockchain and its adoption. We see hackathons being conducted where there are certain platforms which provide grants to bring about decentralized apps and the way they come about as far as their application is concerned. Now, as far as fintech is concerned, if I were to tell you what the use cases are in India, I would still say there's a bit of a regulatory overhang. But what I would say is that the financial institutions are working very closely on the use cases to ensure that they solve for today's problems, the so-called wicked problems, right, and leave some of the trivial use cases so that the blockchain and the crypto impact is seen with as much significance. So what we have been seeing here is that financial institutions are adopting a disruption for adoption of blockchain, and they're focusing on creating new business models which are customer centric, and that's something which is very exciting as far as the India ecosystem is concerned. There's a lot of work to be done, but I think we've made some very good starting steps.
Thank you so much. Maria.
Let's say, coming back to what the previous speaker told us, we do have a lot of interest also for BRICS countries now in the fintech development, also in the sphere of blockchain. It's actually an integration of technology that's being introduced. And of course, from the regulatory side, it's a lot going on. And the very important point now is to harmonize the definitions, the legal terms actually in different countries. We are now dealing on India, Russia, or also Brazil, South Africa relations in terms of fintech development, also including virtual assets exchange, virtual assets definitions, and things that are connected with this. Also working with banks and payment systems. I am in the BRICS payment committee, whereby actually I get access to opinions of industry leaders in our countries. And that's very, very interesting now how, again, more formalized industry players are getting more and more interested in integration with fintech sector and with blockchain startups. So this is probably one of the most interesting development directions that we can talk about, and how actually the regulation, which is my point, let's say how it's changing the blockchain community and the relation to blockchain from the side of classic industry players. And that we have many projects now where, let's say, banks or neo banks are integrating virtual assets. It's, of course, we all know that banks have problems opening accounts for crypto exchanges or for companies that work with crypto to fiat exchange. And even when you get a license, it's sometimes very, very difficult to find a bank that you can work with, because some part of the world lives with blockchain, some part of the world lives with fiat, and it's bigger. So how to get access, how to make the bridge from one to another, that is actually a very important task at the moment. And we're dealing quite a lot with this. It would be very interesting to exchange experiences with the other speakers also, how and what you're seeing, what solutions you're using, how to explain the regulated classic, let's say, players, the essence of the projects, and how you're dealing with this bridge from crypto to fiat, and what solutions you find.
Let me move to the second one. So I really wanted to discuss which are the differences, the main differences between centralized and decentralized finance, and strength and weaknesses. Aaron, do you want to start with this?
Sure, I will start. I think the main difference between CeFi and DeFi is traditional CeFi financial institutions store and process data on their computers, while DeFi is done on a network of computers where data are transparent to all participants. And advantages of CeFi include easy access, high processing speed, low computing power, and easy for regulators to monitor and control their activities. Disadvantages of CeFi include potential theft by hackers and employees of the financial institutions, lack of transparency, and requires high level of trust by their customers. And I see the advantage of DeFi include providing financial services that are open, trust minimized, non-custodial, yet trustworthy. but there are still a lot of disadvantages of DeFi at this moment in time, which include slower speed and scalability, which is dependent on the host blockchain, such as Ethereum public chain. And the next one is the instability due to problems blockchain, such as Ethereum blockchain in going through various changes. For instance, the mistakes committed during the transition from proof of work consensus to new ETH 2.0 proof of stake system, which can lead to risks. And the third one is the liquidity problem, as the entire DeFi space is still small compared to CeFi. And last one I can think of is users or investors are responsible for their own mistakes and may be irreversible, such as sending tokens to a wrong wallet address. Thank you.
Thank you. Ali, what do you think?
Yeah, thanks, Max. Completely agree with what Aaron had to say. I think he's covered it fairly well. I'm just going to spend some time in terms of explaining what DeFi is, just for the users to understand. Maybe it's a bit of a 101 talk, but I think it's worth saying it. So the DeFi is short for decentralized finance, which, as the term denotes, is basically using blockchain technology basis smart contracts, and these smart contracts basically self-execute without the need for having any central authority or legal system, which I think is the crux of the whole DeFi technology, which is very essential to how the whole system works, and very comparable, I would say, to how blockchain per se works. So the key differences are, like what Aaron mentioned, there are no intermediaries. The borrowers and lenders are connected directly. There's a full transparency, and the most important piece here is that the digital collaterals are accepted. You have cryptocurrencies, you have NFTs, and that's again a very exciting segment where you have online game assets, you have photos, videos, title deeds, and so on, which was earlier not there, especially in the traditional finance piece, which was mostly limited to securities. So to that extent, both the concepts are very different. The advantages, I would say, are very similar to what blockchain brings to the table, which is speed and democratization, and then the tokenization features, which we just spoke about. The weaknesses are, there is a lot of regulatory uncertainty, and there are governance issues, which brings about a little bit of financial risk for now. And these are early days right now, so the liquidity is also a challenge, especially in the automated market making, where certain liquidity pools, etc., are required for algorithms to work. And then the final risk, I would say, at this point is your technology risk itself, where, as it is decentralized, you really don't know whether these systems are vulnerable or whether they are, robust enough. And the last piece, I would say, Max, is the tax piece, which is in certain countries where the jurisdictions are still not clear in terms of how to tax, such transactions. So, well, while I say and put them under the disadvantages bucket, I would say that these are still very early days, and some of the issues which we are facing right now, I'm sure, are surmountable. It's just a question of adaptation and having the right use cases. I think these two are critical for DeFi as a concept to really penetrate deep into the society and the world at large.
Thank you, Ali. Jorgen.
I've had the pleasure of working in the banking sector for the last 20 years, mostly from a cybersecurity perspective, actually 22 years. And what we have seen, especially around the Middle East and particularly also in Bahrain, is the birth of a much more advanced FinTech sector that was not present. Of course, this is a result of many elements. Some are crypto related, some are not. If we go look at something like, for example, Revolut, which is probably one of the leaders today in the fintech sector as a neobank, almost in its initial launch had little or no contribution or usage of blockchain is its solutions. However, we quickly realized that both of them have got a benefit by working together for many reasons. One is the FinTech is about technology, and technology in the banking sector includes a combination of many technologies. One is definitely artificial intelligence because of the monetization of the data. The other one is, of course, big data technology is complementary to artificial intelligence. Another one is contactless technology, mobile, full stack development, and definitely blockchain is one of the anchor elements of FinTech. So if we look at from either side of the coin, the first coin meaning from the FinTech sector, the value that blockchain brings is the value of trust and the value of transparency, the value of decentralization, because not necessarily every single FinTech solution has these elements built in. So you can say the value added tick mark of blockchain to FinTech solutions will help in their adoption and their credibility in the markets in which they're trying to participate. Blockchain by itself is not a solution, so it needs to obviously be complemented with quite a lot of other elements to have, you can say, a completely end-user, end-to-end solution. If we look at it from the other perspective, blockchain itself has got also a lot to benefit from FinTech. You can say that blockchain as a technology has been successful in cryptocurrencies as kind of a use case 1.0. But I think blockchain still needs a lot of use cases to mature for it to get a lot more traction. And this goes beyond, you can say Bitcoin, which I can sometimes refer to as blockchain 1.0, with the birth of blockchain 2.0, meaning Ethereum and smart contracts. We have the capability of developing a whole new set of FinTech solutions that were not available before, including DeFi, but not just DeFi, GameFi, and many others. Now the metaverse, which complements its /FinTech/ digital twin combination all in one. So I think the more use cases and solid use cases that blockchains get, especially the blockchains that are geared, you can say post-Ethereum, that have the capability of running enterprise class performance. Performance meaning 100,000, a million transactions per second. 20 transactions per second does not cut it as a FinTech solution, because as soon as you're starting to do things like payments or anything similar to that, you need to have in the neighborhood of 150,000 transactions per second to be taken as a serious solution. But today there's enough blockchains that have this attribute to be in them. So I think it's kind of a symbiotic relationship between both blockchain and FinTech. And I think they both help each other along the way.
Thank you, Jorge. Maria.
Everything that I was thinking of and that I really appreciate about the, let's say, the convergence of the global convergence of, let's say, and the possibility to overcome different barriers in terms of borders, some technical or legal problems that are still existing despite technology. Blockchain indeed is a very transparent thing. And now we're seeing also in the regulation, the ways how to actually determine this transparency and understand what needs to be done from the point of view of the regulators to keep it legal, first of all, so that developers bear less risks in this sense and understand what to do, not to, let's say, remain in the margin field and not to be outsiders. And let's say also to get into, as I've mentioned, get into proper contractual relationships with banks, for example, right? We do still need exits to financial sector, to fiat. And with the understanding of KYC that blockchain-related projects should do, we also have more understandable communication with big funds or with banks, etc., etc. Of course, it is not das Recht in sich, or the thing for itself, the blockchain. Of course, it's again the combination of major technologies. It's big data, of course. It's artificial intelligence, and indeed, what's been mentioned just before. All that, not blockchain alone, has to be taken into account, and most of the projects do combine at least big data and blockchain. Obviously, it's a whole lot of work since the technology is international. It's a whole lot of work to understand how to involve participants from different countries, from the US, from China, from Eastern Europe, from Africa, and how to provide them a safe and understandable field of the play, so field of the game, where they could interact with each other and understand the rules of the game, not only in blockchain, not only in technology, but also in the from another aspect, how the regulators are looking at this, and if there are any risks, the favorite word of lawyers. So obviously, working with projects now, we see it's a very creative work. So I love it, and we do see many opportunities how to develop the existing laws and to create new practice. This is a very also interesting part that we're facing. So with any startup, we have to prepare a certain explanation, and that's a point of discussion also. Let's say for a metaverse, which jurisdiction should be the leading one? Do we need to change a jurisdiction? Do we have to be localized at least partly to protect IT? Or let's say to avoid any kind of claims from one or another country? Or if we do insert personal data, again, how do we deal with this? It's a question for DAOs. It's a question for any DeFi, for any technology, in fact, that is applied in various countries. And that is, again, the future, I think. Whatever we do, there is still classic market. There is still a person with a passport, and et cetera, et cetera. Hopefully, we will see soon the opportunities how we can pay with crypto in major, let's say, in major banks, how we can open accounts and transfer crypto, let's say, to fiat without any problems. But again, we are now seeing the future, and hopefully we will be able to convert some very, very conservative minds to our faith that world should be global, and let's say borders should not stop technology and should not stop projects from development and from interaction.
Let's remove borders. Thank you, Maria. Andy, what's your take?
So I agree with a lot of things that other people have said. I think one of the biggest differences between decentralized finance and centralized finance is the fact that centralized finance allows you to have the oopsies, right? Like you can do the take back, you forgot your password, you forgot your keys, you can go in and get your stuff back. There's a certain finality that's associated with DeFi that I don't think a lot of, let's say, retail investors are really kind of ready for. I think you have to kind of understand that when you make a commitment in a DeFi environment, it's an actual coded commitment to follow through with whatever that process may be. Where I see a lot of opportunity in kind of DeFi versus central finances, the unbanked. if you really looked across the world, we have a huge amount of the population that is unbanked, and you have a huge amount of the population that really has no ability to participate into the economy. With different types of blockchain, you can find ways to enter. I like to think of like a proof of work environment allows you to work into that exchange. So if you are wanting to, let's say, mine Bitcoin, that is your way to get Bitcoin to then participate. Versus a proof of stake, you literally are you're betting on the currency that the system depends on. So it's a very kind of different economic model and approach. And I think that we are going towards an environment where DeFi is going to have kind of multiple layers and really remove the need for a lot of our basic banking principles that we have today. Like the reason why you have a bank, for example, is to store your capital. But if a store of value is what you're looking for, couldn't that be in a crypto environment? The problem is you're not like in the United States. You want your money in a bank that's FDIC insured, because if something happens to that bank, you know you're guaranteed a certain bottom. In crypto, there's none of that. So it really takes away both the benefit, both the negative aspects of a government, but also the benefits, right? Where most governments are trying to deal with the inefficiencies between microeconomics and macroeconomics. Crypto and DeFi is macroeconomics, and CeFi is much more microeconomics. So you can see those dynamics working and the role of government playing a place in there. But there's a huge opportunity for DeFi to really explode as more unbanked are able to participate and put their capital to use. Where in a CeFi environment, you put your capital and the central, the bank or whoever you're putting that capital to use, they're the one who control the kind of the power and the keys of what to do with your money, even if it means taking it. In a DeFi environment, that is a lot more difficult. So I think to stop rambling, that's basically my opinion is DeFi is here to stay, and it's going to help the unbanked. CeFi is where all the capital still is.
Thank you, Andy. Arthur, do you want to share with us your thought?
I would even summarize. I'm very bad in paraphrasing, even though that's what they told us in UCL. But I'm very bad in paraphrasing. I fully agree with everybody, with everything what's been said. As a summary, I would put it that there basically we can separate it into two philosophies. I think it's easier to think this way, or at least it helps me think this way. One is CeFi, when you have business executives who you trust, who have your back in case you lose money, but that's like a small disclaimer there. It depends where it's registered, if what licenses are there, what aren't there, and loads of various scammy things within the CeFi which exist, especially on a smaller scale of small exchanges and in different countries, and God knows how it works. And DeFi, where you trust the code, you believe in code, into algorithm, and yourself. And even though many people will come and say that, yes, of course I trust myself, but how many of us, even myself, I've forgotten their passwords, especially back in the days, wallet passwords, or they send, let's say if we make a transaction, we first make a test transaction to make sure it comes, and then you send the whole amount, and we still make the mistakes of first sending the full amount and then it doesn't arrive, and then you go backwards and whatever. In DeFi, there's no place for error, but that's how it is. I think that's the overall summary of how I see things.
Thank you, Arthur. Going to the topics, I would like to start with you, Maria, because you have been helping so many startups on the legal space. And what's your point of view? Which are the main sectors who most benefited from adopting blockchain?
That is a very interesting question. When I was dealing with the first ICOs, the major question was, do you guys really need blockchain? It's like blockchain T or nano T. When the scam projects came out, most of the people were just using the tag blockchain. Now, actually, with the regulation also and the punishment, let's say, for projects that are misusing it to raise some funds and then escape, people are much more serious in terms of why do they really need blockchain? What do they want to get from blockchain? And I would say any project may find blockchain very useful, depending again on a country, on legal background, what is prohibited, what is not prohibited, like telemedicine, for example, or trading trademarks or patents. We know about examples that blockchain assets were traded, let's say an NFT from the sports sector, or patents for inventions. In some countries, they need a very special registration. Unless you have it, it's not valid and you have nothing to sell. Also, of course, FinTech is the most interesting sector, but it's not the only one. And again, blockchain is a technology. Banks are using it. Many countries don't even regulate blockchain itself. I mean, it's a few countries that have enacted legislation for blockchain itself, DLT license. If you develop some blockchain related technology, you have to be regulated or get a special license or something like this. Otherwise, let's say if it's blockchain related to some money, that is another point. If you have a token, if you have a payment token, it's also a very important question of terminology. It's like Babylon Tower at the moment. Most countries, even in the EU, are using different technology, different approaches. In the EU, we have this MiCA regulation upcoming, but it's still not there. And of course, the practice is getting closer and closer. But anyway, it's still not the common legislation. Blockchain is very useful as a register, as transparency. In the situation of common mistrust, it's major trust. It's replacing trust, let's say, to each other or to banks that are supported with power. That is trust to each other, and many people, since they are participating, it's how it works. Otherwise, it doesn't work. But again, it's a question of why do you use the technology itself, and what do you want to get from it? I mean, do you want to tokenize your assets? It's a multi-metal coin as a stable coin. Do you want to raise money for it? Then it's a kind of an ICO, but also you can give it certain functions, voting, participating in certain projects of the company. You can see, let's say, how the project is developing on blockchain and exit if you don't like it, and then it stops. That's again, mostly, of course, it's FinTech, but I also see a lot of benefits for any industry if it's legally possible and depending on the goals. What do you want to achieve? That would be all.
Thank you, Maria. Jorgen, what's your take? And let me add, I've seen so much adoption, trying to adopt it in gaming as well.
Actually, this is the beauty about really blockchain, because it's a technology of trust, and it's a technology that allows two parties to exchange value without necessarily knowing each other. It allows you to now perform financial transactions, or the equivalent of financial transactions, in a whole multitude of applications. FinTech is definitely one of them. But now in gaming, we have a whole multitude of business models, play to play, play to earn. And all this play to earn is really driving a whole new economy. And this new economy is quite different. So if you're somebody in the Philippines, $50 is enough to feed you maybe for a month, where in other parts of the world is not the case. So it's actually a serious business. There's actually an interesting mobile app that allows you to earn as you walk. And I remember seeing somebody in Dubai walking around with 10 mobiles in his bag. So I think you can imagine the rest, which is quite an interesting element, which means that although blockchain is a transparent and a secure, trusted technology, you can still fool it. So, and the reason why you can fool it is because technology is maybe of the blockchain is 5% of the entire solution. So any kind of solution, you need to look at the entire umbrella to actually make it secure and trusted. But I would like to add one important element, and we have an application that is not 100% fintech, but you can say almost supply chain, invoicing, and so on, that has been done out of Dubai for the largest telecom operator in the world. And it's between this operator and its suppliers. It has hundreds of suppliers, it has hundreds or thousands of contracts that mature at different times. And there's a lot of micro adjustments to all these contracts. This could be servers, storage, micro stations, cellular towers, batteries, and you can imagine all the rest in between. So let's assume you order 1 million mobiles, and instead of 1 million, 100 less show up. So you need to have manual adjustments for all of this. To make a long story short, and I think you can investigate them, and if you need the names, I can forward them to you later. This specific largest telecom organization is going to save about $400 million a year as part of their entire solution. So that really means blockchain in a financial context, when it's implemented correctly, can actually have substantial financial impact in the optimization. It's not just trust, it's much beyond that. Because in this case, we're using the combination of the two parties or the various parties using smart contracts to automate. So you're tracking the smart contracts as kind of the legal aspect between the two organizations. And since it's digitally signed, it will be acceptable. And yes, there is crypto and digital currencies underneath, but they're internal, not external. There's actually an interesting fintech application that is also in Dubai, but for the hotel industry, and it's implemented in the various hotels. It's done by another colleague as well. Again, the element of blockchain and fintech are kind of under the scenes. It works something like that. You check into a hotel, you give your credit card, and that credit card is no longer just to reserve the hotel or to pay. They give you a wallet, and now this wallet allows you to pay for all the experiences around Dubai, whether it's a desert experience, where it's a safari, or, for example, water park, or any of the other thousands of restaurants experiences. And at the end, the adjustments go back to your card. So the interesting aspect, very similar to the telecom one, it's completely a self-contained ecosystem. Yes, there's crypto and digital, but it doesn't go out of the system. The in and off ramps is still the traditional credit card, and they actually will never know the transactions that are actually being performed as part of that. But the beauty comes from how this helps both, in this case, the hotel business, but also the end user use an application. In case there is disputes, you have a complete trace log of all the transactions that happen, and all the disputes quickly go away very fast.
Thank you, Jorg. Andy, what do you think?
I agree with a lot of what everybody has said. I think the areas where we're going to see the biggest impact from blockchain and distributed ledgers is actually automation and AI. I think if Jorge kind of touched on this a little bit, where he talked with his examples, where he talked about how blockchain acts as a kind of event repository. So this is a way to track all of the kind of interactions that happen and the changes that happen. When you talk about animation or automation, you want to make sure that all the steps are kind of in a binary or a selective options, right? So that at no point does it do you have human interaction to make those processes happen. And so from that, when you start to look at how data is stored in a ledger, you can start to take that data and say, hey, this is a truth. This is a shared truth. This is another shared truth. And you can really start to build up different aspects of the value proposition of the data that's underlying. Blockchain is just a tool, and it helps becomes that event repository. And from an AI perspective, Jorge also touched on this regarding the kind of the ability to charge for that data set. So if you now own that data, right, the keys are now in your possession as the individual. You now own that data. If you want to lend it out to somebody so that they have a better algorithm, let's say Google for Google Maps, you can then start, say, hey, you want to use my data? It costs you 12 cents, right? We can start to take ownership of our own data and sell it back to these AI models, to these automation systems, and in multiple ways. I think that that's where we're going to see a lot of changes, and we're going to start to see mass adoption. Where we already are seeing a lot of adoption from a crypto standpoint, it's really in the gamification of different aspects of making money. Right now, when you're talking about ICOs, you're talking about crypto exchanges, people are just basically trying to figure out what's the perfect arbitrage of how can I switch from one coin to the next coin and make money from where I started. I think where we're going to really have that huge transformation is when the supply chain is fully integrated and digitized. And now we're playing in a world of digital twins where physical objects have digital experiences that kind of we get to keep and go with us. And that's where I'm really excited for, like, on IOTA, is the ability to have an NFT within an NFT. So if you're tracking something on a supply chain and it's creating carbon credits, you can literally aggregate those carbon credits in an NFT and then sell that NFT. I think that's the way that these kind of systems of truth can really help propel a lot of startups and kind of change the way we operate on a day-to-day basis. But we are still very much at the beginning stage, and it's going to be we're going to have a lot more churn before it starts to really take off. And I think when you start to think about blockchain as an event repository, that's how you can start to understand it as a tool, and it's a tool to be successful.
Thank you, Andy. Ali, which are the main industries benefiting from blockchain in India?
So Max, when these were early days as far as blockchain was concerned, there were quite a few cynical people who came out saying, is blockchain a solution which is looking for a problem? And thankfully those days are behind us. We clearly see a lot of wonderful use cases as far as the technology is concerned. Some of the eminent speakers spoke about it. Maria initially mentioned about how the concept is and how it could be not just fintech but beyond that. And after that, the other speakers came out with specific examples in terms of how the use case can be broadened. And I'll attempt to do the same from an India perspective. So like what the others have echoed till now in terms of sentiment, that fintech clearly sees a broader use case. And then Andy spoke a bit about supply chain and so on. There are a lot of other use cases too, which at least I am seeing in the startup world. One of that is in the healthcare space, where people are talking about storing health records and all of that using blockchain. There are NFT marketplaces which are coming up, and that's again using blockchain. I've looked at one startup which is very interesting in the media tech space, which basically creates OTT platforms for content creators. And again, this is by using blockchain. So the idea is to democratize streaming and get to multiple monetization options to these small creators, and therefore bring about complete transparency as against the larger streaming companies out there, which seemingly becomes a black box for most content providers. So to that extent, I found this to be a very special use case. Another use case is, what the others also mentioned a bit about gaming and gamification opportunities for sports brands and personalities using blockchain technologies, which enables them to monetize by the NFT trading platform. And a lot of this is, fairly differentiated because it gives them the ability to get access to a wider market. So the way I would come out with use cases in terms of, having a certain amount of traits to it is one, the whole democratization of the user community and how each individual can benefit from it. And the fact that because blockchain has got a digital ledger technology, there is a complete trail and therefore a lot of transparency as far as the users are concerned. So while fintech obviously is a direct beneficiary, but considering that payments cuts across various verticals also, in addition to pure play financial services, blockchain can play a major role in each of these verticals, where there are a large number of users. They are, as not as powerful as some of the banks and other centralized organizations, and hence tend to lose out in the traditional world. Here they get, a better, tech platform to showcase and also have a certain amount of accountability. And then the last piece is to also bring about digital assets, and then, to get them to be monetizable, which is again fascinating as far as this technology is concerned. So I would echo, the same sentiment as what some of the other speakers have mentioned, that blockchain is quite wide as far as its application is concerned. It's just a question of, how do you use it, how relevant it is, and what kind of adaptability challenges does it see. That's how I would sum it up.
Thank you, Ali. Aaron, what about in the context of China? What do you see the most, the best adoption?
Well, we should keep China out of it because China banned crypto and crypto exchanges back in 2017. So we need to look at this in the context of the world. Financial sector is definitely the one that benefit the most. DeFi is transforming banking and financial services, just like how AI has disrupted the wealth management business in commoditizing financial advisor services with AI advisor in portfolio review and construction process. In a similar way, DeFi is commoditizing certain core services offered by banks and financial service companies, notably peer-to-peer deposit and lending, like BTC and ETH collateralized loans, which practically remove the need of customer service representative, can efficiently and process high volume of transactions.
Thank you, Aaron. Arthur, you want to close
You're
it?
welcome.
Yeah, cool. I'm still thinking about Jorge's point of the guy in Dubai walking with the bag and the 10 phones and the Stepan app and making money out of it, because there are loads of them in Russia. I mean, in Moscow, they even call them farms. I mean, they do actual farms when they play games about like 30, 40, 50, 100 phones when they actually do it, because it's now, sorry, it's a little bit off topic. I promise I'll be fast. Even like, if considering about a month or two ago, your return on investment would, like, you would get back your money within a month. So it's like crazy returns. So there were like kids walking around Moscow, like sleeping at night and minting those sneakers. They've pitched to me. I was amazed how they actually do it. But unfortunately, when it was initially on Solana, then they went into Binance chain. Sneakers got more expensive. Anyway, too much off topic, but I just wanted to say that there are loads of them in Moscow, the bag guys with the phones and iPhone 10 and they're minting Snickers. In regards of applications of blockchain, I'm just trying to move to make it
Absolutely.
to
fun.
meet
We need some fun. We need some fun.
to meet Andy's point that we are creating energy here. So I'm trying to do it. In regards of applications, airline going outside of the fintech world, of course, like fintech is the most that comes up in mind, like as everybody has mentioned. In Moscow, we've got S7 Airlines. They actually use blockchain, and it's quite good. I think in 2020 they've made the platform. I'm not sure about the dates, but I think I'm sure they made a platform where they actually proceed payments for tickets and refunds for them, which was actually successful. I think they even connected Raiffeisen Bank onto it, but I mean, it was a good success story. Another application of blockchain. I think there was even a question in the chat in regards of transfer of info and keeping the medical info safe. I think there's a decent amount of startups in healthcare that actually utilize blockchain in order to transfer data between health organizations. So there is a lot to do with data. I mean, keeping data safe and blockchain around that. So it's one of the implications as well. I think that are the most memorable ones that came into my mind right now.
Yeah, thank you so much, Andy. We need energy, so the more you can bring, the better.
I'm doing my best. Then I'll burn out and have a weekend on my sofa.
Andy, let me start with you. We talk about crypto as a way to democratize finance, but are we there? Is really blockchain and crypto something that we allow everyone to pay, have money, and move cash one day, wherever they are?
I think that crypto will be a democratizing agent for a huge amount of, I keep on talking about the unbanked because I think that is kind of the biggest data gap that we have in the world, right? We don't know how much purchasing power. With blockchain, we start to see that purchasing power develop. And I think over time, as more and more people start to interact with the same currency, the costs around the world start to balance out. So as somebody was mentioning, $50 in India might go a lot further than $50 in Dubai, right? But over time, the people who are start to make, let's say, money by being paid in crypto, they then start to spend their capital in crypto environments. So therefore, their cost of living is kind of transferring along the chain. And I think we will start to see that kind of relationship develop as more and more people can participate into these environments. And then when you include DAOs, which are decentralized autonomous organizations, and what I created, which is a COW, which is a centralized autonomous organization, these are different models in which our interactions become transparent and allow us to literally vote with different, sometimes with your wallet size, sometimes it is, what is it called? It's like just if you have a wallet, you get one vote, one wallet. There's all sorts of different ways right now as blockchains are still developing. But when we start to see some of these concepts like digital identities that we see in IOTA or the soulbound token that Vitalik Buterin has talked about, once you start to kind of really identify individuals, those individuals then can start to have the ability to kind of participate in different environments where they would never be able to even participate because they never had any type of say. So if you think about it, a person voting for a proposal on, let's say, urine finance, they are able to talk to everybody. They negotiate, they're democratize their participants. And I think the ability to have all of these different entities where they can participate by just having the token and not necessarily having all the tokens like we have in a society today, right? Wealthy people have X amount more say than poor people, right? And I think in a future environment with crypto, participation is going to be one vote, one person. And I think that's really where we start to see democratization take fold. And the power of individual voices is no longer by your wallet size, even if your wallet size is transparent.
Actually, that brings an important element. I actually see blockchain as actually a new operating system of trust. You can start seeing government organizations using it. You can use it actually in smart cities. A whole new generation of smart cities are being born now, called conscientious cities. And I think blockchain plays enabling factor. It's a very small element, but it's an important element that it's a glue that connects all those dots together. And blockchain can also be used in a mixture, for example, with AI. And AI in terms of trusting, for example, the sensors that actually send the data. Also in terms of trusting the trained AI models. So it allows you to validate models that execute, which ones should you use or not use because they have not yet been properly validated. So I see an ongoing increase of valuable use cases, not all of them fintech related, but fintech definitely the primary element that will continue to drive the growth of a blockchain.
I totally agree. One of the other aspects when you talk about kind of AI aspects and participation, now we don't have a very good way of providing context with AI, with big data and stuff like that. It's hard to understand the context of those data points. And once we put it through a crypto environment, we start to get greater context. What is the data sets that are associated with this data point? And I think with AI, it's going to really enable people to participate who never don't have the technological skills to participate. So this actually becomes a great, once you're able to get the coin and get into the system, you can walk through the system because you have that coin. And as Jorge brought up, smart cities, that system is going to be a physical environment, where right now we're all talking about the metaverse in a digital environment.
Ali, you want to ask something?
Yeah, sure, Max. See, the way I'm looking at it is, I'd like to step back a bit and assess how the world was, back when the internet, made some headway and brought about its relevance, and how, the world adapted to it and how it kind of, took off the way it did. And somewhere I would say today, crypto is, in that zone where people have, listen to the story and they're waiting for it to play out. The tailwinds are quite clear in terms of the online presence, the audience being obviously fairly tech savvy, and there are digitization plans across the world, more so in the developing economies. Now in terms of participation, well, right now I see it more in terms of people using crypto as a means to buy and sell, and therefore it becoming an alternate investment option. But then, like what the other speakers just mentioned, right now the primary participation also can come in from examining those blockchain transactions using an explorer. Mining is something which is fairly nascent, especially in India, to underpin the whole decentralized distribution and security of any given network. So for me, the use cases of crypto and how it kind of contribute to the society is varied, and it's not just limited to what it is right now. As far as the developing economies are concerned, there is a lot to go, and the fact that because it is completely decentralized, that's the whole technology, right? It's a distributed ledger technology, which clearly makes it a democratized solution across society. And therefore I think this particular exchange is going to definitely spread across globally. It's just a question of at what speed will it do it, and how soon will the countries work together and form a seamless transition, which I think is more a question of time and adaptation. But in terms of the structure, in terms of the way the currency has been built out, in terms of the underlying technology, I think there are significant amount of tailwinds as far as the use case is concerned, and clearly this is a play, for the larger audiences. Someone mentioned also about the fact that there is this whole propensity which divides across societies, be it the wealthy and the not so wealthy. I think this is clearly an equitable play, which completely is basis what the user and the economy brings to the table, rather than certain biases which are right now there in the ecosystem. So to cut a long story short, Max, crypto as an exchange will definitely over time prevail. It is just a question of adaptation, and then the society is bringing about a seamless transition.
Thank you, Ali. Arthur, let me touch you the next topic, which is very close to me. We talk about ESG, we talk about impact, but mining is pretty energy consuming, very much, still extremely. So how we get to the point that mining can be sustainable one day?
It's a good question. To be honest, I'm very heartbroken after Luna. I mean, it's like extremely heartbroken. Luna was like a Lamborghini, and we were like following it and watching it and seeing it grow. And I've been speaking to huge investment funds. I mean, billions, who were like strongly in Luna. I mean, for a long period of time, and even I was trying to get some insiders information. I think Maria will block me right now. I was trying to get some insights and trying to get an idea of what they think. They were going like they were saying you must be, if you want to create, they were maintaining capital. I mean, like they weren't going for crazy returns, but they were trying to give an overview saying that if you want to create capital and big sums, you must go into one project and go all in, and that's how capital is created. And I know many people who actually felt pain with Luna. I mean, like strongly felt pain with Luna. Why I'm talking about that? I mean, for one side, yes, and there isn't. I would say yes, and there are hopes that this is possible. But on the other side, there are things that needs to be altered, adjusted for this to happen. That's like my overall view on the things.
Thank you, Arthur. Aaron, do you think we can get mining sustainable one day?
Mining on public chains such as Bitcoin and Ethereum is not sustainable in the long run due to high energy costs and slow speed in comparison to Lightning networks such as Polkadot, Polygon, Solana, and MosFi, where the token transfer speed have been greatly reduced to within few seconds. And then on the other hand, regarding the liquidity mining on AMM or automated market making, may be sustainable as DEXs or decentralized exchanges such as Uniswap, PancakeSwap, and HashBrown attract investor to provide liquidity to make market and earn commissions for token trading. This new business model should be working and has been working for a while.
Thank you, Aaron. Jorge, what do you think? Andy, Ali, if you want to talk one after other,
Yes.
please don't wait me to call you, right?
Yes, I believe there is a whole new series of solutions related to fintech that will play an important element And one example I like to maybe mention because of the thing is what I call carbon credits as just one, which came out of ESG. So it created carbon credits as an ecosystem, and then that lead to a whole new series of exchanges, not crypto exchanges, but carbon credit exchanges that created a whole new ecosystem model. So I believe because blockchain, when combined with other technologies, is a technology of trust. So any kind of application that needs a certain amount of validation and it's dealing with what I would call mission critical items, I think the future looks bright, and this goes way, way beyond fintech use cases. And the list of these use cases will actually continue to grow as we proceed.
Andy.
I think we have to start with the first thing regarding mining is we have to understand that it's for proof of work only, because you don't need mines for proof of stake or DAGs, which are direct acyclic graphs like Hedera Hashgraph or IOTA. I think fundamentally anything that requires more energy in a world where we are still, let's say, looking to find new sources of energy outside of oil, I think is not really sustainable. And I think that there are certain elements that we can start to change where and how things are mined. So yesterday I was at a blockchain conference here in Seattle, and one of the directors at Filecoin was mentioning what they're thinking about repurposing the heat that is generated from their proof of storage, which is close, for all intents and purposes, is basically proof of work. So for Filecoin, so what they've done is they've actually cleared out the floor and are thinking about turning into a dance club and using the proof of storage miners to heat the environment. I think those are the ways that we're going to start to see some changes, but I don't see the full, like, I don't see Bitcoin getting so big and occupying so much electricity around the world just because everybody's conscious about reducing energy consumption or reappropriating it to, let's say, our smaller devices. Like, we already have problems with energy. So I just think, in the, let's say, 10-year to 20-year window, most of the cryptos we will be looking at are going to be either proof of stake or DAGs. I don't see them as a proof of work. But there's a lot of mining opportunities around today, and especially in environments where, let's say Texas, where the laws are so backwards that what's happening is these mining rigs are convincing to put in sustainable power because wind power and solar power is the cheapest power per kilowatt. They're able to then basically create power in towns that didn't have power because of the power demands of a mining rig. But I think that's only because of how backwards our laws are versus any real solution that mining brings to the table.
Jorge, let me thank you for coming because I know you had to go. I hope to see you again. Thank you very much. Thank you for your time.
It's been a pleasure to be there. I would like to just add maybe one thing on the mining side. I do believe that the proof of work will be diminished over time, and more creative ways, including flare gas, hydroelectrical, nuclear, and so on, will come complement. But yes, we have today over, I would say, 100 consensus mechanisms. So we should not stop at the usage of one just because it was the first one. Innovation will continue in our space. That's what makes our space so unique. I've been in technology for 35 years, and we are always looking for innovation. Innovation never stops. The moment you stop and say, this is the good thing and nothing else is good, that's the day you die if you are in technology.
Thank you, Jorge. Thank you.
Cheers.
Thank you. Take care.
That was a real motivational talk. I mean, I loved it.
Maria, I want to touch with you this sixth and last topic. How safe and reliable are crypto exchanges today, and DeFi regulations problems and recent regulatory attempts as compared to centralized finance?
Binance has got a license now, and it's been seeking for a license in Russia. And the environment is quite changing here also. And Binance got a license in the Binance in the Dubai World Trade Center, same as Kraken got a license in Abu Dhabi. And Binance got a license in Bahrain. In France and Italy now it's regulated also. So if you used Binance services, let's say yesterday, you would see that compared to a month ago, even the path that you follow, it has changed. Obviously, considering the EU regulations and requirements. So obviously, the world has changed for crypto exchanges. The DeFi exchanges that are not located anywhere, they are probably less exposed to restrictions that exist when you get a license and get regulated otherwise. But obviously, there is a very high burden now from any jurisdiction, the citizens of which are coming to an exchange in terms of what are you doing and what you are marketing, even in the internet space, through some servers in this country and stuff like that. Obviously, the risks are pretty high if you are a developer and you're controlling it and changing the code of a DeFi. If you look at the FATF regulations, which are probably an exemption of legal harmonization, then we see the new definition of what is the virtual assets services provider and what is a DeFi, and when the developer is responsible for the change of the code or for the way how the DeFi project is working. So there is a new approach. There are some new approaches, I would say, to how to make the exchanges safer. And that's an interesting part of the story. So I have many clients who are exchanges, and they're all looking at the jurisdictional choice, because being nowhere for many exchanges is not an option. They either get an EMI license when they want to work with cards and exit to fiat and things like that. So exchanges do really tend to become safer. And many regulations are also requiring exchanges to be to prove that they are sustainable and that their technology is safe also for hacker attacks, and that they take care of the clients. So we see more and more exchanges getting licenses and regulations, which are also appearing. And also, let's say there is a ban in China and in some other countries also. So, by the way, I just wanted to add to the previous story, we should differ the future of crypto as a mean of payment, as a mean of exchange, and different types of crypto or virtual assets. We should differentiate them, and the approaches should be harmonized as well. And we should differ them from CBDC, central bank's digital currency, which is another point. So yes, I do see that the crypto exchanges are becoming much more safe. And obviously for DeFi, the regulation is still outstanding. It's not there. It's just coming. But we would see it also. It's inevitable if we want to have an exit somewhere to fiat. Or it may happen when we will be able to pay in crypto for goods and services and stuff. But it's yet not everywhere. So yes, I do see that they're becoming safer.
May I ask you, between centralized and decentralized finance, which is safer?
Now, even now, I'd say there's a big question. I save my money in both.
Let me ask you, Aaron. Aaron, which is safer?
Well, actually, a true decentralized finance platform is definitely safer. And as the Bitcoin is the first decentralized finance or DeFi business model, has already proven that it's hackers cannot penetrate it, and government have hard time to intervene its operation. And CeFi, it's depending on human, and the greeting as human, someone's going to wanting to steal from everybody else's money. So in the long run, definitely true DeFi platform will provide a much higher level of security. And then on DeFi, right now for us DeFi people, we believe that we should not be required to be licensed or regulated, because although we provide the function of an exchange, but technically we only provide the technology to enable P2P transactions. So we're just a technical platform, and people are transacting with each other directly. So that's our perspective. Government may have a different view, but they would have a very difficult time to regulate, because a true DeFi at the moment, there's no KYC or AML procedure. On our hash brown swap platform, all you need to have is an email address to obtain verification code for access. Even AI robots can access our platform to send and receive token and do trading and do liquidity farming. And the US government still have hard time to figure out how to regulate Bitcoin. So I will estimate they're at least 5 years away from regulating DeFi.
Thank you so much, Aaron, for your insight. Ali, you are the last one. You will close.
I think it will be a good way to close, because what I'm going to mention about some of the key watchouts, as far as some of these exchanges are concerned, and what Aaron very rightly mentioned is that the countries are at a different stage as far as regulatory approvals and understanding is concerned. So until then, it is more of a caveat emptor, where the consumers need to beware and watch out. So what I'm going to right now mention is some of the traits which one need to look for while interacting with some of these exchanges. The first is the transparency per se. The audit information, etc., needs to be looked at, especially the volumes to check if there is enough liquidity. The ease of trade per se is very important in terms of turnaround time and mechanism for prices and the final settlement. All that needs to be looked at quite closely. And finally, I would conclude by saying the reputation of the vendor is absolutely critical. So basically, the consumer needs to be taking some of these measures to safeguard as much as one can until some of these regulations come to a stable ground as far as countries are concerned, and what their final outcome is on this.
Thank you so much, Ali. We, I think, finish our panel discussion today. It's almost 6:40. Let me thank you to all the panelists, the one who stayed with us, the others has to go. And thank you to all the attendees, and I hope see you again next time. We have one pitch, agnostic pitch session, the 3rd of June. Who wants to come, you are more than welcome. Ali, Aaron, Maria, I don't know if you are still here with us. Thank you so much. Thank you to all the others, and I hope see you again. Thank you. Have a good evening. Have a good weekend, a long one.